why that changed your life.
Yes. Well, first of all, thanks for having me. I'm a fan of you both. You guys should know that.
Thank you.
Nice to be here in person. Yeah, my Bitcoin story, my dad got me into Bitcoin. He got me and my stepmother into Bitcoin. So he registered the Bitcoin Mom Twitter handle for my stepmom. And I had just dropped out of college.
Yeah.
And he was like, hey, listen here, buddy. I just lost about 30 grand sending you to school and you didn't learn anything. So you're going to get into this Bitcoin thing with me, whether you like it or not. And it turned out I liked it a lot. And the story you're referencing, my stepmom started the very first Bitcoin meetup in Chicago. It was at my house.
Okay.
I came home from coding boot camp and Andreas Antonopoulos was in my living room and with, I don't know, 7 or 8 other people and saying a lot of what we talk about on this podcast, talking about how Bitcoin can empower humanity and how it is a continuation of the human story of engineering a better world. And I was like, whoa, who's this guy? And I took my backpack off and I sat there and I listened. And then 13 years later, here I am, David, talking to you.
Your dad was an OG Bitcoiner.
Yes.
So he worked at the, you can give us his background, but he was a futures broker and he bought Bitcoin, I believe, 2013.
I wish he bought it in 2022 unethical financial market activity here. If you want to pull off that nonsense, you got to go to New York. So they did. But Chicago is very cultured, ethical, principle, and they had built a lot of these markets with their hands. And they actually, not only my father, but Don Wilson, Cumberland, DRW, a lot of those jump trading, a lot of these Chicago prop firms, trading firms, high frequency firms got Bitcoin first. And so it was around then when everyone in Chicago was building positions. 2013, and I had just dropped out of college. If I have a minute more, I'll tell you guys my favorite.
You got all the time in the world for us.
So my favorite story of my father, when Bitcoin really clicked for us and for him, was after Silk Road was busted. And it's a counterintuitive story, but I love telling it because, so Silk Road, for those that don't know, the famed dark web drug marketplace, right? Yep. And it was the first supposed free market, and you could buy and sell all sorts of drugs and had access to total human free trade globally. And it used Bitcoin as an anonymous currency that credit card networks couldn't stop. Now, everyone needs to buy a stock, buy a bond, buy something to avoid getting debased and things inflated out of their life. And now Bitcoin. And he's always described to me as building a short dollar portfolio because these guys, these old finance guys, they lived through the divorce of the gold standard. They lived through the 2008 financial crisis. So anyone really in tune in financial markets has seen the government get too big, seen regulators step in and bias Wall Street, bail out losing money. How does it afford its bills? Well, it needs people to lend it money to continue to perpetuate its services. So the government actually gets money lent to it in the form of these bonds, treasuries market. And so when you buy a 10-year, you're actually lending money to the government and they're paying you an interest for the money that you're giving them so that they can continue to finance and operate the US government. And the biggest problem that the US government has right now is that no one's willing to lend it money anymore, right? The deal was, hey, China will allow you guys to operate in this trade surplus, which has now reached $1 trillion annually. You will take then that cash flow, you don't reinvest it back into your economy because it'll strengthen your local currency. What you need to do is buy dollar-based assets. The dollar-based assets we want you to buy are these treasuries. So we're going to allow you to operate in this surplus. We're going to print you this money and give it to you. In return, you're going to lend it back to us. But that deal's long gone, especially after the 2008 financial crisis. China and other trade partners are like, screw this. I'm not keeping my purchasing power by holding the dollar and buying these treasuries. And so what the US government and specifically, and I know that people associate not only Bitcoin, but a lot of economic efforts as Republican, Democrat, left, right. The bipartisan effort is that the US deficits are unsustainable. The reason, and we had talked about this on our last show, is this goes all the way back to the World Wars, in that post-World Wars, US took on the world reserve currency issuer. And as we mentioned, within that, you take on deficits and you allow other countries to produce things for you. So you print dollars and you ship those dollars out. In return, you get food, oil, energy, my iPhone, this microphone, probably not produced here in the United States of America. What does that do to your country? Well, one, it disables your ability to produce anything because you've delegated and outsourced making phones, microphones, food, energy, gas, all of that to other trade partners throughout the world. It also destroys your middle class because as everyone else gets a trade surplus and they reinvest that capital back into dollar-based assets, they're buying the stocks, they're buying the real estate, they're buying the farmland. And so asset holders are getting perpetually wealthy. The solution? That's what we're struggling with and what Trump has to figure out. But the reality is, if you really wanted to solve the problem is the currency. The dollar is artificially strong because of its world reserve status. Dollar-based assets are artificially strong because of its world reserve status, meaning we print dollars, we ship them all over the world, countries give us other stuff in return. Now they have all these dollars. They have to do something with the dollars. They cannot reinvest them locally. It'll ruin their export business, so they puke them back into America. So American exceptionalism and a really strong NASDAQ that never goes down has been entirely funded by countries like China. And so if Trump's new mandate, which the American First Investment Policy, which came out in February, Trump said basically take your money and go home, get out of the market. When you saw dollar down, bonds down, stocks down, usually it's stocks down, but bonds do well because it's a flight to safety, right? Dollar down, stocks down, bonds down. What does that mean? That means capital's leaving the country. That means money's leaving America. Trump's mandate to China and other trade partners is get your money out of the country. These things the dollar has to get weaker. Now, Trump, Powell realized they don't have the leverage in negotiations in a trade war with China that they thought they did. And you saw this extreme pivot where it's like, oh, we put on a pause, let's give it 90 days. And now the pivot is to capital controls. And what capital controls are is it's trying to achieve effectively the same thing. Trump has flirted with a 30% withholding tax on foreigners' assets. Meaning if you do own Google stock, if you do own luxurious real estate in America, if you own farmland, we're going to tax you 30%. Or there's a proposal, like you mentioned, 2%. Whatever it is, it's discouraging foreign capital. If you saw Harvard recently came out with a press release that hit the wire that said, we're not allowing foreigners to enroll students and pay us anymore.
Well, so that's Trump's administration blocking them.
Yes.
And now Harvard's suing them back. Yeah.
Yes. So, meaning foreign capital isn't even good for an education anymore. That is get your money out of our country. And this is a way of saying, yes, you have a surplus of dollars, but percent a year on average over the last 10 years. So you don't want to get rid of that unless you have to. So what if you can borrow some cash against it? And that's the product that we're offering. And we offer the product at 50% LTV, which is important, meaning you can only take half of the value out of the Bitcoin in cash. We do that because the asset's so volatile and we're trying to protect customers. If I let you take 100% in cash out and then Bitcoin dipped a little bit, well, then you're underwater. And so you start at 50% LTV. And as that LTV grows towards 100%, we start to issue you alerts and say, hey, you might want to pay attention. And then at some point, what we call a margin call is, hey, you've reached a level that is too scary for us. And you have 24 hours to just deposit a little bit more Bitcoin. And we give those instructions. And again, this is just because we aren't in the business of our customers don't really speculate. We do offer buy and sell, but we're predominantly buy side. Our customers we consider Bitcoiners, and we aren't in the business of highly. I'm running like a perpetual short dollar trade, and it feels pretty good.
Yeah, so that would necessitate the interest rate staying low. If let's say we get a return to the 80s, for example, we get double-digit 10-year yield, would that change your life?
If the 10-year yield went to 80%. I think Bitcoin would probably be worth like $1 million.
All right.
And
there's a headline right there.
Yeah, I would happily take that. Yeah, I mean, so the most difficult thing about sourcing capital for Bitcoiners to borrow against their Bitcoin is if you understand Bitcoin, you'd rather just own it and get the 60% CAGR than any fixed rate. But we've been able to do that and source that capital. And if the rate goes up, I mean, really at the end of the day, if you have a long-term time horizon, as long as the compound annual growth rate of the asset is over the cost to borrow it, it's mathematically a good idea. And so that gap, so part of the announcement that I'm here to make at the conference is we're going to be able to offer single-digit loans. You can see it. Part of the beauty of Bitcoin is the cryptographic proof. And so you deposit the Bitcoin, it sits right here. It never moves. It's your collateral for the duration of your loan, and we make money just on the interest. And there's no yield, there's no fancy business. We're not this massive company that's stretched thin between 300 different coins. We're very good at selling ethical, high-functioning Bitcoin financial services. And that's one of the many reasons we're very, very different than something that's existed before is we keep it simple.
Have you ever been interested in any altcoins?
No,
Never.
never.
That's interesting because the
Normal journey of a person getting into crypto would be, hey, I learned about Bitcoin, and then there's this shinier thing for the moment, and then I'm distracted. But why is yours not like that?
Well, I think if you put yourself back into the time where I was coming home to my living room to Andreas Antonopoulos, and back in those days, that's when all of those altcoins were being created. So like, think about joining Bitcoin before Ethereum existed. I was there when Vitalik sold some pre-sale ETH to my stepmom at a conference.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.